If you want to find the most effective trades, you need to use the news as your roadmap for when to take trades. Monday, Tuesday, Wednesday, Thursday, Friday. Monday, there was no news, meaning not a lot of volatility. Tuesday, we had Euro news and USD news, and we created a low and created volatility. We slowed down on Wednesday when we had no impact news. Thursday, we created volatility in the market. Friday, we had USD news during the New York session, which is where price created high of the week and then reversed. This is where the weekly candle opened. Price manipulates lower, pushes higher, and closes round about here, leaving you with a bullish weekly candle. Now here's the trick. If we are bullish, we are likely to create the low of the week at the start of the week, and you can use the news to find out when that's likely to be. And in a bullish week, we are likely to create the high of the week towards the end of the week, where we can use the news to find out when that would be. So start looking at what Forex Factory is telling us, use it as a roadmap, and plan out how your week is likely to look. Breaker blocks. What are they? What do they do? And why do we care about them? A breaker block is an area of price where the algorithm will refer to, and this usually allows traders to mitigate long or short positions. I want you to focus on this candle here. That is the last down close candle before this move higher. There's only a few things that make this a valid breaker block. Number one, the expansion must sweep an area of liquidity, and number two, price must reverse after the expansion has happened and we have swept liquidity. Once those two things have happened, you've got yourself a valid breaker block. As you can see, price has come back into where this breaker block was formed and started selling off. A few things to note about the breaker block is I wouldn't use this solely for entries. I use this as confluence for entries. If I see a breaker block, it's more of an added confluence to take a trade, but it has to be met with other things, such as being in alignment with higher time frame structure, such as having imbalance within where I actually want to enter to also support the breaker block. But go and back test this, see how many examples you can find, and let me know how you get on in the comments. Let me simplify how you can consistently find entries like this and entries like this. Go to a higher time frame and identify key areas, such as areas of imbalance and order blocks. Once you have those areas and you have a bias, which in our case here is bearish because we're reacting from this imbalance as we speak, you can then go and hunt setups on a smaller time frame. Now this entry is actually very simple because we have our point of interest, which is the imbalance I just showed you. We have a liquidity sweep. We have a valid order block right here. And if we measure this entire range to the downside, you can see this order block fits nicely within our optimal trade entry area. But let's say you miss this entry. You then need to go to a smaller time frame. As you can see, price has swept above this liquidity at the start of the New York session and displaced lower. So all I'm going to do now is go to a smaller time frame and wait for a reaction once again to go lower. And as you can see, we had the liquidity sweep. This is the displacement lower. This is another setup you can take because it is giving you extra evidence that your bias is playing out from the higher time frames which we originally spoke about. You have to understand that the highest quality setups come if you follow the narrative behind the higher time frames, and within the higher time frames you need to be in line with a key area such as an area of imbalance or an order block where price is going to support your bias. This is without a doubt the easiest way to identify accumulation, manipulation and distribution. But firstly, what is AMD? Basically, price will accumulate. That is essentially just consolidation where price is moving sideways. Price will then manipulate by taking out liquidity, and then price will distribute inside the range that the manipulation has created. And this is where I want you to start looking. Asian session, London session, New York session. So when you get to the charts, I want you to highlight the Asian session. If the Asian session has accumulated, you should expect London session to manipulate, and in which case you would expect New York session to distribute. But here's the thing. If you arrive to the charts and the Asian session has expanded instead of accumulating, you should not expect London session to manipulate. You should expect London session to accumulate, therefore expecting New York session to manipulate. So it all comes down to what the Asian session has done. Asian session, accumulation. We then expect London session to manipulate, therefore expecting New York session to distribute into this fair value gap right here. All you have to do, come to the charts and see what the Asian session has done first, and that will offer you the most precise way to identify AMD. And in terms of time frames, I typically will look for this type of pattern on a 15-minute chart, but I am in confluence with the higher time frames.